Hello, and welcome to today's episode of the Business Valuation Insights Podcast. I'm Eric Jordan, Canadian Personal Property Appraiser, or CPPA for short. I'm also a former auctioneer with a specialization in valuing intangible assets. In this episode, we're going to explore how and why individuals with hands-on business ownership experience are better qualified to be business valuators than accountants, even those with 20 years of experience. We'll also look at examples from Victoria, BC, that highlight how successful businesses are built on intangible assets. So let's get started. Why experience matters in business valuation. I want you to understand this key concept. A person with 10 years of experience owning and operating a successful Cobb's bread bakery or another relevant business is better qualified to be trained as a business valuator than an accountant with 20 years of experience. Why? Because valuing a business, especially its intangible assets, requires hands-on experience. On my website, pin.ca, you'll find details on our 25 factors affecting business valuation methodology. This proven system ensures that every aspect of a business's intangible value is captured. We also have examples of our 5 senses inspection report, which gives you an idea of how we incorporate sensory observations, sight, sound, smell, touch, and taste into the valuation process. Real-world example, franchise valuation with RBC Bank. Last week, a franchise owner and RBC Bank decided to use the Eric Jordan 25 factors affecting business valuation process, coupled with the 5 senses inspection report, to produce a valuation acceptable under the Canada Small Business Financing Program, CSBFP. Why did they choose me? Because I have a good working relationship with CSBFP's upper management. They actively seek my advice, and I have the email trail to prove it. Every week, I'm working with a new client and a new bank, but the process remains the same. Where the accountants leave off, we take over. Here's where my process differs from accountants' methods. Accountants focus on reducing your tax burden. They're trained to do that, and they're good at it. But tax value isn't the same as fair market value, which is what's required under Canada's Income Tax Act. Under the Act, intangible assets must be valued, and that's where accountants typically fall short. We begin with the balance sheet. Most of the time, the values there do not reflect current fair market values. That's where we step in. If necessary, we'll perform an asset valuation to ensure everything's current. As a CPPA, I'm qualified to do this, while most accounting-based valuators are not. Venture capitalists understand the importance of intangible assets, but most accountants do not. Once we normalize the balance sheet, we turn to the profit and loss statement. We adjust it to ensure that everything is paid at fair market rates, including wages for owners and family members. Owners sometimes overpay themselves, and sometimes they underpay themselves or family. Both scenarios need to be corrected to present an accurate view of the business. This is where 10 years or more of hands-on experience running a business matters. Business valuation requires judgment and practical knowledge. Just like being a captain of a commercial airline, a head surgeon in an operating room, or an art restoration specialist working on $1 million family heirloom. Hands-on experience matters. And this is why a Cobb's bread franchisee with 10 years experience is better suited for valuation training than a 20-year accountant. Don't be fooled by smoke and mirrors. The valuation world has its share of smoke and mirrors tactics, and you've probably heard some of the terms used. Free cash flow to the owner and EBITDA. Here's the truth. Free cash flow to the owner is not profit. It's a misleading term that's often used by scoundrels to fool buyers into thinking the business is more profitable than it is. If you're buying a business for $500,000, you want to know what percentage of that amount will come back to you each year as profit, after everyone and everything in the business is paid at fair market rates. EBITDA works for public companies, but it's not appropriate for valuing private companies. Some people use it out of ignorance, while others use it as a tool to mislead buyers. Victoria, BC Business Valuation. Examples. Now, let's look at some real-life examples of Victoria-based businesses that have built their value on intangible assets. Dr. Scott Beatty, Marine Labs, Data Systems, Sources of Funding, Government R&D Grants, University Partnerships, and Angel Investors. Jason McIsaac, Sheringham Distillery. Sources of Funding, Personal Investment, CSBFP loans, local community investment, and government agricultural grants. Kristen Needham, Sea Cider Farm and Cider House. Sources of funding, agricultural loans and grants, personal investment, and CSBFP loans for property improvements. Dimitri Adamopoulos, Ithaca Greek Restaurant. Sources of funding, personal investment, CSBFP loans, supplier credit, and government business loans. Charles Levine, Llama Zoo Interactive. Sources of funding, venture capital, accelerator support, government R&D grants, and private equity. Kevin Oke, Llama Zoo OO. Interactive, co-founder. Sources of funding, venture capital, accelerator support, government R&D grants, and angel investors. Jason Cridge and Arman Arani, Cognito Health. Sources of funding, venture capital, angel investors, startup accelerator support, and government health tech grants. These are just a few of the many Victoria-based entrepreneurs who've built valuable businesses based on intangible assets, not just physical equipment or real estate. Before I wrap up, I want to give a shout out to Cobb's Bread. I've worked on valuations for many franchises, and Cobb's Bread stands out. Their support for franchisees, from supply chain purchases to marketing, is second to none. They've truly set a new standard in the franchise world. If you're ready to understand the true value of your business, I'm here to help. Our approach at PIN Services Lemihilili ensures that intangible assets are properly valued and factored into your business's final valuation. Our process is designed to maximize your valuation and position you for financing or sale. Thanks for listening. This is Eric Jordan, CEA. If you have questions, call me at 1-877-355-8704. You can also learn more at pin.ca. I'll see you next time on the Business Valuation Insights.